Good morning, everyone. Today's Wednesday. It is March the 22nd, and this is the Moneyball Morning Report for the Benzinga Pro platform. What do we have? We're looking at the ES. It's stalled around here. Not surprising. Yesterday's run-up was surprising, but again, volume's pretty important. And my suspicion is people are punching forward to get out of the market. Remember, we have to buy to cover when we are short. And so if we have a short position that has got us in the market, hoping the market will go down, the only way we can get out is buying to close. And if a lot of people begin to buy, that forces the laws of supply and demand into effect. That pushes prices higher. Right now, we are completely stalled. It's very, very nice still motion, which I hope for. I would like for things to be still, and frankly, I'd like to see a bit of the volume profile pull back here. Now, let's say for whatever reason, the market decides, and that's the market participants, decide they're going to move to the north. Where are the lines in the sand that are going to give us targets that are attractive for upside positioning? Well, the first thing is you want to know when to get in. And 40.24 was a great line in the sand. The closer it comes to it, the better the long opportunity there for the least risk. Because if you lose 40.17 here in the E-mini S&Ps, you are likely to see dips that bring you back into 4,009. And so that's my thought. Pulling into 40.24 around that area gives us the long. We can continue long if we get above 40.38. But if it comes into 24 and we get to 38, we've got to take some profit because overnight they've told us that there are a lot of sellers there. How do we know that there are sellers there? We know sellers are there because price is not accelerating. Price does not move up unless buyers are moving it up. And if buyers go on strike at the top of these edges, the sellers can sit there all day long going, hey, I got these for you. You don't want them? And they don't take them. So that's really what we're looking at. We are in range expansion. We've moved out of our trend line formation. And if we stay above that 40.38, 40.53 is the next step. And then 40.78 is really that next line in the sand, right? And then 80. So that is really what we are looking for in the ES. Do we know that a lot of traders want to buy? Yes. Do we know that a lot of traders want to sell? Yes. So what do? Nothing. We just trade the ranges in terms of deciding, hey, I'm going long or I'm going short because I believe. Let the market tell you what to do. All right, let's take a look at the NQ. Oh my heavens, that's not it. NQ still in much better shape. A lot of folks talking about how wonderful the NQ is doing this year. Here's the fact of the matter. The NQ absolutely stunk up the building last year. It was just horrible last year. And so between, January of 2022 and September of 2022, it was just a roller coaster ride down. Now it's just trying to recover. So what is this chart looking for? Well, it's looking for old levels that it used to hold. It's not that it's really outperforming per se, because it's still reverting back to some general mean. Now, in the short term, in the short space, from January 2023 to present, yes, it's doing better than the regular chart. So let's see. We've got a double topping formation on the weekly. We've got resistance up ahead at 12,949. and 13,025. We're sitting in the same spot of, hey, listen, I cannot get up over yesterday's close or yesterday's high, and I'm sitting down in these sections below the close of the prior day, which means I have sellers that are actually trying to engage. The buyers are on strike. They're saying, no, not buying anymore. That brings price down. And so what are we looking for in terms of support zones? Well, right now we sit at about 12,850, maybe 12,810 to 12,750. Yesterday's open was somewhere around 12,700. Let's see. That open is 12,699. Those are the regions that we look for. On the downside, listen, look at your last 3 candles, including the one that you're looking at presently, and look for the midpoints and the highs and the lows of those candles. And those are going to be likely areas that price action comes into. Traders are not these magnificent geniuses. They're just regular guys and gals that look at the market and go, oh, they stopped right there. Maybe they'll stop there again. And if we're good enough at doing that consistently and watching for the dance steps, as it were, to follow along, we're going to be in really great shape. My suspicion is that all the run up towards the afternoon of the market, again, is very much more a matter of people getting out of the market than people getting in. I have said this a few times, and I might be flat out wrong, but I suppose that no matter what he says, the market is not going to take it well, simply because I think there's systemic trouble that's going to come out in different ways. Not a banking crisis, not a housing crisis, just a grinding, slowing of things, and people are trying to get ahead of themselves. All right, for SPY, very quickly, I've been talking too long today. For SPY, what are we looking at? Well, 400 to maybe 403.70, going to be the upper bounds that the SPY looks at. From the downward areas, we want to see 396.40, potentially down to 393. Listen, how do we know we're wrong? We know we're wrong if we expect price to move in one direction and it doesn't, and then it breaks a floor of support or the ceiling of resistance, and those two things together invalidate our trade. It's as simple as waiting for the pullback, taking the trade. If it doesn't bounce and it begins to fail, we let it come in. If it holds our stop and begins to bounce, we're in great shape. If it holds our stop, begins to bounce, but can't get up over the prior zones, we have to get out. And so just pay attention to the dance steps of the market. A lot of us don't like dancing, but maybe it's something else you think about that has a rhythm and flow. All right, take care, everybody, and I'll see you all tomorrow.